As of 2026, if you receive Social Security and SSI together, the Social Security Administration is now using a system called Access to Financial Institutions, or AFI, to verify your bank accounts and resources on nearly every application and ongoing review, a real, mandatory change from the old process, where in-depth bank checks only happened if your reported resources looked close to the limit. This isn't a proposal. It's already in effect, and it directly affects anyone drawing SSI, including the large group who receive it alongside Social Security retirement, survivor, or disability benefits. Here's what this video covers: how this new verification system actually works, a separate change to how much the SSA can now withhold from your check to recover a past overpayment, and the real math behind how your Social Security and SSI combine, including one common piece of misinformation you need to know isn't true yet. Stay to the end. The last part clears up a rumor that's led some people to expect money that isn't actually available. SA has spent recent years working to reduce improper payments and overpayments across its programs, and the AFI system rollout in 2026 is a direct part of that effort. It's the mechanism the agency now uses to catch resources that used to slip through, including old or forgotten bank accounts you may not think about anymore. At the same time, the agency separately tightened its overpayment recovery policy this year. Neither of these changes explains itself to the beneficiary directly. They show up as a smaller check, a request for documentation, or a notice that references a policy most people have never heard named. If you're thinking, this isn't me, I've always reported my accounts honestly. The AFI system still runs a comprehensive search regardless of your reporting history, meaning an account you genuinely forgot about, like an old CD or a small savings account from years ago, can surface and affect your eligibility, even without any intent to hide anything. And if you're thinking, I don't get SSI, just regular Social Security, the resource limit and this verification system apply specifically through the SSI portion of your benefits. So if you ever apply for SSI in the future or currently receive both, this is directly relevant to you. Here's the part that should make you a little angry, in a useful way. None of this gets explained at the moment it actually matters. You find out your resources are being checked more thoroughly, or your check is smaller than expected, only after the fact. Understanding what changed now is the only way to actually get ahead of it rather than react to it. The first change. Starting in 2026, the SSA's AFI system is now used for verifying the resources of nearly all SSI applicants and recipients, not just those whose reported resources were already close to the $2,000 individual or $3,000 couple limit. The system can run up to 10 geographic searches based on your address, specifically designed to identify unreported or forgotten accounts, including old savings accounts or certificates of deposit you may not actively think about anymore. This affects the retiree receiving a modest concurrent SSI payment just as much as one whose SSI amount is small, since the resource limit is a hard cutoff, exceeded on the first day of any month, and you're ineligible for SSI that entire month, with no gradual phase-out. The catch. Many people genuinely don't remember every account they've ever opened, and the AFI system is specifically built to surface exactly those forgotten accounts, which can trigger an eligibility review, even without any wrongdoing. The action right now: inventory every bank account, CD, or old savings bond you or your spouse currently hold, including anything you haven't touched in years, and confirm your total countable resources stay under $2,000 for an individual or $3,000 for a couple. The second change, starting in 2026, the SSA adopted a stricter overpayment recovery policy, raising the amount it can withhold from your monthly check to recover a past debt from 10% up to 50% of your benefit. Separately, the agency has resumed withholding 15% of benefits from beneficiaries with delinquent federal student loans, a collection practice that had been paused in past years. This affects the retiree who's never had an overpayment issue just as much as one who has, since an overpayment can happen through no fault of your own, a delayed report of income, a resource that briefly crossed the limit, or an administrative error on the SSA's end. The catch. A 50% withholding rate on a check that's already modest can create real financial strain, and many beneficiaries don't realize they have options to request a lower withholding rate or dispute the overpayment itself. The action right now: if you receive a notice about an overpayment, you can request a waiver if you believe it wasn't your fault and repaying it would cause hardship, or request a lower withholding percentage using Form SSA-634 rather than accepting the default 50% deduction automatically. The third point is a clarification, and it matters because misinformation about it is spreading. The SSI resource limit, $2,000 for an individual, $3,000 for a couple, has not changed and has been exactly the same since 1989. There's a real bill in Congress, the SSI Savings Penalty Elimination Act, which would raise those limits significantly to $10,000 for an individual and $20,000 for a couple. But as of 2026, it has not passed. Verify, confirm current 2026 status of the SSI Savings Penalty Elimination Act, since legislative status can change. This affects the retiree who's heard hopeful news about this bill just as much as one who hasn't, since acting as though it's already law, for example, keeping savings above the current limit assuming the new rule already applies, can trigger an actual eligibility problem under the rules that are genuinely in effect right now. Separately, understanding how your concurrent benefits actually combine matters here too. The SSA counts your Social Security payment as unearned income against SSI, applying a $20 general exclusion and then counting the rest dollar for dollar, meaning your combined total from both programs tops out right around $1,014 a month for an individual in 2026 before SSI phases down to zero. The catch: people sometimes expect a bigger combined total than the math actually allows, not realizing SSI is designed specifically to fill the gap up to that ceiling, not stack fully on top of Social Security. The action right now: don't restructure your savings based on the proposed higher resource limits until the bill actually passes, and use the SSA's official benefit calculators or call 1-800-772-1213 to confirm your actual combined payment under the current rules. Before this week is over, do 3 things. 1. Inventory every bank account and asset you or your spouse hold, including anything forgotten, and confirm your total stays under the current $2,000 or $3,000 resource limit. 2. If you've received an overpayment notice, ask directly about a waiver or a reduced withholding rate using Form SSA-634 rather than accepting the default 50% deduction. 3. Don't make financial decisions based on the proposed higher SSI resource limits until that legislation actually passes into law. 3 steps, well under an hour combined, protecting your eligibility and your monthly check under the rules as they actually stand today. Here's what's worth remembering. None of these changes were built to explain themselves to you. A verification system rolls out quietly. A withholding policy tightens without a personal notice explaining why. A bill gets discussed in the news before it's actually law. The rules that are real right now are already in effect. Knowing exactly which ones those are and acting accordingly is entirely on you. That's not an exaggeration. That's just how these changes work. If you know someone receiving Social Security and SSI together, send them this video. You could be the reason they check an old forgotten account before it causes a problem, or the reason they don't act on a bill that hasn't passed yet. That's what this channel is here to do. In the next video, I'll walk through exactly how to request an overpayment waiver using Form SSA-632 step by step, including what documentation actually gets a waiver approved. I'll see you there.